One of the most successful entrepreneurs in America over the past 50 years is going public with his fourth and final prediction about a scenario he calls America's nightmare winter. You've probably never heard of Bill Bonner, but in addition to owning an interest in businesses all over the globe, he also owns more than 100,000 acres with massive properties in South America, Central America, the US, plus 3 large properties in Europe. Bonner says we're about to enter a very strange period in America, which could result in the most difficult times we've seen in many, many years. Bonner has made 3 similar predictions in his 50-plus year career, and each one proved to be exactly right, although he was mocked each and every time. This is why I strongly encourage you to read about Bonner's fourth and final prediction totally free today. It's all spelled out in a free report we've put together about America's nightmare winter scenario. Get the facts for yourself. Go to americasnightmarewinter.com to get your free copy of this report. Even if he's only partially right, it will dramatically affect you and your money. So again, go to americasnightmarewinter.com for this free report. Hi, this is Daniela Cambone. Welcome back to the Daniela Cambone Show here on Stansberry Research. Well, the market is now bracing for another 3/4 point hike from the Fed. Some would argue a full point hike. What does this all mean for the markets and most importantly, for your bottom line? Joining us again today is Todd Bubba Horwitz. He is the founder of BubbaTrading.com. Bubba, welcome back. So good to see you.
Danny, it's always a pleasure to be with you. I can't wait.
Can't wait to get you fired up and talk about everything we need to talk about. Okay, first on the agenda here, let's talk about the probability of a 3/4 point hike. Offline, you were saying you're thinking it's going to be a full point. This is according to the CME group. What should we be expecting from the Fed later this month? What should we be preparing for?
Well, I think that there's a very good chance that they're going to go a full point. Jerome Powell made it very clear in Jackson Hole that we have to suffer pain. They don't have to suffer any pain, but we have to suffer a lot of pain. And the only way to make it painful is to keep raising rates faster, which this is the first time that into a recession that they've been hiking rates. But nominal rates are still very negative. So, with all the information, even at 3 1/4, 10 or 3 3/8 10-year notes, we're still well behind the curve. And this is the Fed's fault. And they're trying to catch up, which is always their problem. They're always way behind the curve of where they should be. And that's causing a lot of the bigger problems, which will create lots of pressure on the markets as well.
Absolutely. And, we have the Fed's Mester coming out saying, we can't declare an early victory on inflation. And she's repeated that the Fed rate should be above 4% by early next year. So like you said, they're not going to stop basically till there's more pain. So how should we be preparing if we know more aggressive rate hikes are coming here? What could we be doing?
Well, first of all, I thought inflation was transitory. Okay. Remember when it was transitory? But yeah. I guess it's real. And unfortunately, we have the cure right in our fingertips. All we have to do is have the president sign a bill and go back to shale and fracking, and we could reduce our inflation and we wouldn't have this problem. And then a rate hike would not be a problem and it wouldn't create the havoc that it's creating. However, preparing, you need to be, look, from an equity standpoint, you have to be in the markets at all times because nobody can predict how the market's going to react. We can only go by the statistical information that markets go up 8.5% year over year in history. So that's from a statistical standpoint. I can't worry about the market's going to collapse. I do think it's going to, but I think it'll come back. Okay, so I think you just have to be prepared for what's going to happen and not be so over leveraged into a market where you're forced to sell out. That's where most people run into trouble. And the other side is they sell out things that are strong that you shouldn't be selling, and they sell their strong to hold on to the garbage that costs them all their money.
Okay, let's talk about this because I was a bit shocked to see, coming from you, because you've never really gone on the record saying that you think the market is going to totally collapse. But that's what you're saying now. Why do you think we're on that road?
Well, we've got so many problems, Danny. From inflation, we're going to have a food shortage. We've got the dollar is being continually manipulated lower, or the fiat currency system is fraudulent. Okay, when you look at the big picture, it's really taxation without representation. The two organizations that run this country, okay, the government and the Federal Reserve, they make no money. They don't create anything. They pass everything on to the taxpayer. However they sneakily do that, whether it's through inflation or through other things, they're giving us taxation without representation. And people are not making as much money. They cannot keep up with the cost of inflation. You realize that next year you might be paying $10 for a loaf of bread. Okay. And in lots of parts of the country, there's not going to be any bread. So what do you think is going to happen? We're already seeing food riots in certain parts of the world now. And we're only in the infancy of this big food shortage that we're going to have.
Absolutely. And coupled with that, all the droughts we're seeing that will just add to the food shortage situation. Bubba. But, I always go back to this question. Okay, let's have a straight up, honest conversation that we always have. Okay. We know that the Fed operates as an independent body, but we also know that the Fed chair is appointed by the President of the United States. Correct?
Correct. They're not really independent. They are more of they're another arm of the government.
But that said, right, with a presidential election that's going to come quicker than we think, if the economy is in utter chaos, wouldn't the Fed want to try to avoid that situation? The president wants to try to avoid that, I would think, at all costs.
True, but I think let's look at it this way. The most powerful person in the world is Powell, right? The money man and he does have the right to make his own decision. But they are linked to the government. Of course, they were named the Federal Reserve, so people would think they were part of the government, but they're a banking cartel. And they know that there's some havoc going on here, and they're trying to do everything they can to prevent some craziness happening. But at the end of the day, okay, they can't avoid what they've done. They can't slow inflation the way they're going about it. What they're creating is a much more strife and much more pressure on the middle class, which you would almost think that they're trying to destroy the middle class with their policy and what they're doing with the money, because the people that get punished the worst are the ones that can afford the least, which is the middle class, who don't make enough to overcome and keep up with all these things. Plus the fact that you now see the housing market collapsing as well.
Turning our attention to Europe now, Bubba, weren't the sanctions against Russia supposed to be crippling Russia? And yet here we have Europe bracing for what could possibly be a winter crisis if there's a total Russian gas shutoff. They're basically buckling under pressure here. What do you make of what's happening in Europe and what's ahead for the countries there?
Well, they're in major trouble. Number one, okay. Russia did shut down the Nord 1 to Germany. Okay, first they shut it down for maintenance, which was scheduled, and I said they're probably never going to reopen. They reopened it for a couple of weeks and then shut it down again. Russia is thriving throughout all this. If you're going to use sanctions, then you have to be willing to back up those sanctions. You have to be able to hurt somebody financially, and we did not do that. We'd have to go back to oil. Okay, and fracking and shale producing. That is the only way that we can punish Russia and make the sanctions stand. The rhetoric that we're hearing that they're in default, Russia has never been stronger financially than they are now. Okay, the ruble is flying. They're in great shape, and they've got total control because they're the sole supplier to Germany and to the UK. And if you look at what's going on in both places, you've got major inflation, you've got gas and water shortages on top of it, and you've got countries that are going to crumble throughout all this pressure, and they're paying 5 to 6 times more for natural gas than we pay.
Yeah. Very scary what's gonna happen there, Bubba. And I just want to get back, to your original point about how Biden could make inflation go away like that. Why? What do you think is behind it? You said it's all political, but what is the reason that he wouldn't take another course of action here?
Well, I think he'd rather fly 8,700 miles to beg Saudi Arabia and beg Venezuela for gas and oil. I think that the agenda here is for the Great Reset, trying to get into really socialism versus anything else. And I think this is an honest attempt to destroy the middle class. I think that the party in power now, The progressives are looking for everything for nothing and everything for free, which obviously we know nothing is free. It's everything has to be taxed. Everything gets passed back to the taxpayers. But I think this is on their agenda. I think that this climate change, this green energy. Look what's going on in California. Okay, they have to. You just bought a Tesla, but you can't charge it because we have to shut down the power. And now they're back to using gas-powered generators. They keep talking about the carbon footprint, which is laughable because we're still burning just as much fuel. Do we burn less if we buy it from Saudi Arabia? Does the carbon footprint change? No, it doesn't. You have permanent, in my opinion, you have permanent intentions on destroying the middle class to get rid of it, because everything that this administration has done since it started is put out small business out of business. Okay, they have destroyed everybody. You're left with Amazon, Walmart, Google, Facebook, Twitter, and some other big companies. Who's left? Where's the local pharmacy? Where's the local shopping center that independent owners own? There aren't anymore because they can't compete with the big guys because of what these administration has done.
Bubba, what do they gain by eliminating the middle class?
Well, it just makes it more money for the politicians. It makes it more money for the wealthy. I mean, this is the same thing that's happened in every major empire going down when they collapse. Is that you see that the oligarchs and the rich just get richer because in these times of strife, they're still benefiting. They can buy things that nobody else can buy now. They can do those things. And these progressives want everything for nothing. They want from healthcare to welfare states to listen, look what they're doing with illegal immigration, letting people in in droves and floods, and they're taking them in gladly. Do you want to do that? California's budget is 75% pays for illegal aliens. I mean, that makes no sense.
I want to just, before we talk the metals briefly, I want to get back to your point about your thoughts on a market crash. Just a timeline of how far you think that is. I mean, do you see that happening this year? Is it next year? And what kind of a crash are you seeing? Are you talking a 50%, 80%, 90%? Just get your ideas.
We're looking at 50 to 60%. Timing it, there's no way I could time it, right? You have an election coming up that could create a potential bounce rally out of this, but the damage that's being done is not going to be fixed by an election. You might get an initial reaction depending on how it goes, but I would say within the next 12 to 18 months, I think we'll be 50 to 60% lower than we are now. Okay. I think that you've got some dramatic problems in this country. You don't have, your supply chain is not delivering goods, so companies are not going to be able to make their earnings, and they can't sell enough. You're already seeing layoffs at major corporations. The jobs number we just got last Friday was a bunch of BS. Okay, all it is, it's people working more than one job to try to live and survive. So at the end of the day, right now, these markets look like they're on a beeline to go lower, and I would say that 50 to 60% within the next 12 to 18 months would be realistic. Now, could it be this year? Listen, anything can happen, but I think anytime you have a major event in play, which is the election, that will have some effect before, and it may hold it up, or it could collapse it right then, and that's what I think we'll see.
Let's wrap with your thoughts, your latest thoughts on gold, silver, and platinum, which you say are absolutely ugly.
They are.
What's going on with the metals, Bubba?
They're ugly. You know what? Right now, you have people selling assets, okay, and a lot of gold and silver to support other positions, okay, because of the overwhelming pressure on markets, on housing, and other things. And I think you're just kind of in a spiral lower, okay, at the moment. Now, I think if you look at it logically, I think there's probably a great buying opportunity for a future investment, right? Again, you have to remember, if you're trading or if you're investing, okay, I think buying physical metals and not paper is garbage, in my opinion, okay? Paper is for trading and for goofing around. But for investing, you want to own the real thing, because I don't think there's enough gold to cover the paper that's out there, right? So I think this is a time you start nibbling, but again, remember, you have to buy it with money that you're not going to need tomorrow. Because if you're forced to sell or forced to liquidate at some point, it's not going to be at a price you're going to want to sell it at, and you're going to sell it at a loss versus having the ability to hold. Listen, I think gold and silver are great, and as you know, I buy it all the time. But I am short in the market right now, and I will stay short on paper until the trend itself changes. And right now, since August 12th, I don't think we've seen an update until today since August 12th. And we continue to every rally gets sold hard, and you can say it's the banks, it's the manipulation, it's whatever. Well, you can call it whatever you want. It takes two sides to make a market. Right now, it wants to go lower.
Most would just say, Bubba, it's the strength of the U.S. dollar, plain and simple.
I disagree. I think the U.S. dollar is worthless. I think the number is just a number, but it buys a heck of a lot less than it bought before. So why would it's more of a supply-demand issue, not a U.S. dollar issue. I hate when we start talking about the dollar compared to the correlation, because the overall correlation is skewed, number one, and number two, it doesn't have to happen today.
Sorry, to that point, right? Supply demand. If when I speak to my friends at the bullion dealers, and you look at the premiums on, for example, silver products, which are very high right now, it obviously shows demand is there for these products. People are buying gold and silver, platinum, palladium. They're buying. The consumer is there.
Not enough. Not big enough. Remember, what drives markets is price discovery. What drives markets is markets go higher when there's a bigger demand, or the buyers are being more aggressive to buy. And when the sellers are being more aggressive, which happens to be the case right now, it goes lower. Okay, there's more sellers that are willing to meet the buying demand, and premium that is put in for a reason, because they may have a crew. Give me a gigantic silver and bullion dealer and tell me what their premiums are and what their sales are, and I can give you a better idea. But when you look at the overall market itself, okay, it gets driven by more aggressive buyers or sellers, and right now the sellers are much more aggressive.
All right. Todd, before I let you go, most folks are back at work this week. We're restarting. We're heading into the fall. We're gearing up. Bring it home for us. Final thoughts as we, we're all back to school in a sense here.
I think we got another couple of days right after this weekend. We should start to see some business come back. It's still been pretty quiet. This past week has been quiet. And I think that we'll start to see some more business. I think you'll start to see more selling pressure show up. I think a lot of the big money is looking to sell, and they're trying to let the retail investor buy. And I think that's been the MO of most recent history. And I think we're going to see some big sellers come in. You might see a bump around the election, but we'll see how the election is going to look, right? There's a lot of talk going on, and of course it's all rhetoric, so it's hard to really say. But the big concern is going to be food, and I think that could cause the biggest problem, because we're not going to have enough production, and you take Russia out of the equation, that creates a big problem.
There's always a lot of talk going on. That's absolutely true. Todd, Bubba, Horwitz, I love talking to you. We talk a lot.
Hey, you're the best, Danny. You're my hero. You're the greatest there is in this business, and I love your interviews. You do a super job.
Love right back at you. Come back soon. And thank you all for watching. We'll have more incredible content headed your way here on the Daniela Cambone Show on Stansberry Research. Don't forget to sign up at danielacambone.com so you can stay on top of all these awesome interviews. That's it for me. Thanks for watching.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.